Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, December 10th, 2021. It is 1:19 p.m. Eastern Time, and what I'm going to do in this video is update all the, or at least it's close to all, if not at least the majority of the various asset classes that I've highlighted as trade ideas recently. That would be obviously the stock market, equities. We're just going to look at the indexes quickly, then get into gold, silver, the US dollar, and the euro. Those are currencies and precious metals, another asset class. Bitcoin and cryptos, Ethereum, again, another asset class in itself. And then some of the commodities I've highlighted recently. We'll look at corn, sugar, coffee, lumber, and then finally, last but not least, it's pretty much hit all the check marks here on asset classes. We'll look at bonds, both the Treasury bonds and corporate bonds that I've highlighted in the last couple weeks. Alrighty, the equity markets, I'm going to be brief. There's just nothing. Today is one of those days I could smell it coming into today, and you know, I'll probably shut down after this video. This is a go nowhere, do nothing day. Markets or indexes are, you know, almost flat, slightly up, but again, just noise. They're here between, smack between that key 401 resistance right there, and what they did today, they came in for a backfill or a test of the top of the gap right there. The recent gap from the other day. And that's it. Then we're going to park the week there, and it's not going to give us any clues. It's going to keep us guessing, or at least a, you know, what I said, an indeterminable candlestick here on the weekly chart. We had the bearish engulfing right here a couple weeks ago, engulfed those previous two candles. Got a check mark with a red follow-up candle the next week, and this week's candle is going to close green, barring some crazy unlikely reversal into the close. We're going to have a green close today. So whether we close up higher, rally into the close near the highs, nothing other than move back above this candle is going to change that. So it's again the sell signal, at least this particular one. There's still a lot of bullish indicators that haven't triggered or changed trend indicators. You got to remember that, you know, you can have a sell signal on one chart pattern, or buy signal on a chart pattern, or a candlestick reversal pattern, and that may or may not be a reason to go long or short. But again, these are pretty good, and we had them on the daily as well. So I'm just going to leave that as now to be continued next week. We'll see where this goes. Sometimes you know, would have helped the bearish case to have another red candle this week, but it doesn't eliminate it, because quite often, you know, when you start going down, there's always a snapback rally, and so that's it. Let's not read any more into it. We'll know next week. If next week we start to take out levels like 401, the previous highs, like I said, it'll still be a divergent high. And you can see here, even on the 60-minute chart, we might not even get that other high taken out, because look at this. If we popped up next week or into the close today, we could have some divergence here again on the 60-minute chart, and that may be the catalyst from the next leg down. So like last week, what I had said, and I did the video on Friday, probably best to just keep it light into the weekend. There's certainly a case to be, I think, for me, to stay short, but not an aggressive position based on where we bounce to and how close we're in proximity to those highs in that 401 level. If you don't have any positions, long or short, again, if you're bull, you go long and you just set stops below the gap. I think any pullback next week should, again, quote, doesn't mean it will, but that's where the buyer should step in if there's a backfill the gap. And if they don't, then that's going to be bearish. So, you know, you could short here with a stop somewhat over 401 or even above the recent highs. If you're targeting a lot more downside, that all depends on where your stop's going to be. If you're only targeting a move down to, let's say, my, you know, third target zone or fourth target zone, the final near-term target, well, you just calculate, you know, if I short it. We're in no man's land. I wouldn't go long nor short in no man's land. I like to either short bounce back to resistance, or I like to short breakdowns below support. That's objective to me. Shorting or going long in no man's land, meaning you're smack between support and resistance, right in the middle. It's not ideal, really, because when you can short a pushback to resistance, you can set a stop somewhat above that resistance, and likewise, when you short a breakdown, you can set your stop somewhat above the breakdown, and vice versa with longs, except everything goes the other way. Alrighty, let's move on. So we'll have to continue this next week, and if anything big happens today, again, I don't expect it, I'll do another end of day update. Next one up in the order I announced would be Bitcoin. recently we had, I mentioned Bitcoin as an objective short here. We had a triple top high right there. We had negative divergence just like you did back here and here. Everything you want to see. And once again, that was one of the biggest drops in Bitcoin in a long time, since we shorted right here the day after the high, rode it all the way to the bottom to the button right there. Again, those low targets were called out well in advance, and then went long, went long there again. And so long, short, you can see all the trades here. So Bitcoin just trades like a dream, at least to my style technical analysis. And the other day we went down, we had a counter trend rally, and I told you I think that'd be it, and I said it'd be objective to short back at 41.53. Think there'd be another leg down, and there has been. It's been about a 10% drop so far. So we're back to that other low. Let me show you something now. It's a weekend. Bitcoin, even the Bitcoin futures, or at least the futures or GBTC, they're going to stop trading today after the close, and then they're going to pick up again Sunday night. Not this one. This is pink sheets. You're going to have to wait till Monday morning if you're trading GBTC. But if you roll the futures, then here's what we've got here. You have potential divergence. Honestly, I'd be more apt to, if you're short, just cover the short and not risk this playing out to next week. If you did short the bounce back right here, and there's that 10% or so drop that we had. This is BRR, and we're looking at an hourly chart. And what you have here is potential bullish divergence right there. Flat line, equal lows across the board there with higher lows in the RSI. That is positive divergence. Now, this was a pretty significant top, and it may have more downside. We had bullish divergence here, and we bounced, but we didn't bounce very far. We bounced up to that 59.36 resistance, and then another drop. So bottom line is, I wouldn't personally go long or short, until weekend with positive divergence on the 60-minute charts, the BRR, especially after it's so oversold, such a big drop. There's so many diehard crypto fans out there just foaming at the mouth to buy dips, and who knows. Anyways, that's my thought. All I can share is what I see in the chart. So we could go down, we could gap down, or drop down, this weekend, Sunday night, Monday morning, and still have positive divergence as long as these, this previous low here isn't taken out in the indicators. Maybe we go all the way down here. That's really your next support. So let me show it to you also on the 2-hour chart. I know a lot of people are interested in crypto, so let me just pull this 2-hour chart of the futures again. BRR. This contract's going to roll too soon. It might have already rolled here. It'll start rolling this week, but it'll stop trading soon, and then I'll update it with the next month contract. But there's the levels. This is levels I gave you before on the 60-minute chart. 47,490. We hit that target there, that support, and we're back to it now. So we're at support, but we've already tested it once. If we drop, my next support 44,920, and then 41,600. This is a level I really like. This level, I'd be interested to see if and when we get there how the charts look at the time. That's nice support when I say that, because you had multiple reactions there from above, multiple from below right there. Then it was a breakout, pretty strong rip, and a rally up to that divergent high, and a key reaction high right there. So there's some levels. But again, you fall down. Any of these support levels could be the and we could, the divergence, if it plays out, by the way, guys, if you're apt to go long, or you're currently long, pretty good resistance up here at 53,593 right there. Not huge, but decent, and even bigger resistance there at 59,330. So you're up to speed on Bitcoin. Let me give you Ethereum. We'll look at the ETF type instruments. You have ETCG. So from, what was it the other day? Where was the bounce? That was right here. Did the video the other day after the bounce and said, I think that's it. Maybe go short. I think there's another leg down on the cryptos, and we did. We dropped about 15%. ETCG. 14.76% so far. And where we're at now, this one has, I pointed out, it does have, or had, or still has potential but unconfirmed divergence. I'm going to get to this in a second when I update lumber, and the reason why, divergence is not a buy signal. If you get a drop to support with divergence, you can certainly step in. Right now, there's no buy signals. We're still in a downtrend, and like I said, there's let's just see. I'll pick it up next week, see where we're at. I'd just again be more apt. You got 15% or even part of that 15% drop from where was mentioned as another likely leg down the other day. Why not cover? Why not get 15% in 2 or 3 days? Take the money and run. Sit in cash, not have to worry about it over the weekend and redeploy. That's active trading. ETHE, this is the Ethereum Trust. I think it's Ethereum 2. If memory serves me correct. You had the bearish rising wedge here. You had a breakdown, kickback, double top high, check, 1, 2 tops, and then of course that was an objective short as well. 47.31 went down. Oh, from there hit that key, pretty good support there. 35.36 right there, bounced. And that's where, again, it was mentioned the other day, we'll probably get another leg down. And if we take it down, here's my next support, 31.50. And this could be a major top too, by the way, guys. That's a pretty big divergence. So, there was, I should have drawn the lines here. Let me throw it in there just in case so you see what I'm looking at. When we double topped, you have almost equal highs there, and then you still had the divergence got even steeper on the indicator. So this could indicate a much larger or a lot more downside to come, and that's why I wouldn't be stepping in here right now and going long. But you can. There's support right there. We hit it once, we bounce, we hit it again, but favoring some move, additional downside. And my if things get ugly target, at least near term, is all the way down here, that uptrend line. So that's Ethereum. Let's move on and look at the next one. Let's look at some commodities. I'm just going to go over the futures so this video doesn't go too long. You can extrapolate these charts with the ETFs or ETNs if you trade it. In other words, start out here with corn, which is ZC. No, scratch that. We're going to get to corn. We're going to get the commodities, but I had mentioned I was going to cover gold, silver, the U.S. dollar, euro. That should have been up front. So let me loop that in here, and then we'll get to the ag commodities. All right, starting out with gold and silver. Before we get there, let's look at the U.S. dollar. Remember, this is a 2-hour candlestick chart, so every candle on here represents 2 hours of trading. We had a nice, clean, bearish rising wedge confirmed with negative divergence, one of my favorite patterns. Proved to be a top so far. We've been stair-stepping lower. Then in my recent update, we set up in this price channel here, and then we broke down and we back tested. So that's it. That's where we're at. We've had, I need to extend it. There it is. Pretty much back testing the channel from below. I maintain these targets. I think the dollar's headed lower, and if so, that should be bullish for gold and silver. There's a primary or longer term, much more significant uptrend line. So the way I see this playing out, first support's at 95.560 right there in the dollar, which I would expect to be hit over the weekend or next week, early next week. Bounce. Once we break that, we should head on down to my that target there, the next target, which comes in intersecting price support about 94.60 plus the uptrend line. So if that plays out, as I suspect, that should be bullish for gold. If the trend line breaks, that's even a more powerful sell signal. It'll probably take us down to that next level, about 93.5, 93.50. But let's just right now focus on that near-term target, which it's not a lot in percentage terms, guys. Remember, Forex doesn't move much. These are currencies. The dollar index is really the basket of the U.S. dollar compared to all the other currencies, but you can forget about all the others. The euro's 56 something like that percent weighting, and the yen is like 23, almost 25%. So those two alone, it's really the euro and the yen that are going to move the dollar index, and mostly the euro. And so speaking of that, if you're trading the euro as an outright trade, or you're just tracking it to see where gold's likely headed, E7, those are your euro futures. We're down to a 30-minute chart or 60-minute chart, hourly candles. Remember, we were just looking at a 2-hour chart on the dollar, so it was zoomed out twice as far. But this is that exact same bearish rising wedge we had on the dollar, correlates to a bullish falling wedge on the euro. It broke out, it was impulsive, everything you want to see, ran up, hit the first resistance at 114.09, have been consolidating since. So when the dollar breaks the support I just showed you, euro should break around at the same time, break at 114.09, should send us up to this next target zone at 114.67 to 114.95. Probably get a reaction there, and then hit my final target, which is 115.70. And if that plays out, then that should be net bullish for gold. I know gold's just kind of doing its thing lately, in silver, but they've been hanging in there really, despite the recent Well, now we've had a little bit of pop in the euro, but let me pull that up for you. GC, gold futures, 2-hour candles, 120-minute chart. Primary trend line right here we're still flirting with. You had a bullish falling wedge right there. It broke out. Gold hasn't really taken off yet, but it's not, that pattern certainly hasn't failed. It's just not been a very, not a lot of follow-up to the breakout so far. But again, if my dollar and euro scenarios play out, gold should run up here to 18, 19, 11, and then 1840-ish, and then a breakout there, and then maybe test those recent highs when we put in that bearish rising wedge back here. So that's gold, and silver should run along with it. Usually does. Let me pull that chart up. Silver it's had for a while, as pointed out, positive divergence. It broke out, kind of meandered around, took a jog down, made another new low, but look, we're coming really close to that previous reaction low, and the divergence that was in place back here when I mentioned it in the last week or so is still in place now, very much in place. That's the thing about divergence. Not a buy signal. It can extend. It can get burned through, but I don't, again, I don't think it will. I'm pretty clear on that. I think it'll play out, but if it doesn't play out and we drop and we head down below there quite a bit more and the divergences are taken out, you just don't want to ride it down. But targets, let me give you one additional target here. If you're going to actively trade it, we've got some pretty good reactions right here. That's certainly a target, about 23.10, big reaction low there, quite a few reactions there. So they're up, and a near-term resistance level where we've set up some consolidation recently around there. So these are levels, pop. As and if each level's pop, that should be bullish, take you up to 23.10, 23.804. 24, I'm going to move this line. I've had it here for a while. I'll leave it there and just add another one on top. It's more of a resistance zone. I'm just showing you levels I see right there. So that would be target zone, and of course that previous high as well. So anyways, I think silver's setting up. Look like it hopefully could run next week. Start running. Okay, now on to the agricultural commodities, starting with corn. ZC is your contract. Hourly candles, 3 months of price history here. Little bearish rising wedge right there with negative divergence that you had, and breakdown. Took us up, had another rally to a marginal new high, which was still divergent high. I think I first mentioned as a short back here, one of these two breakdowns. We're right there. We really haven't gone underwater. We're right about where we were, maybe a hair underwater. But you can see we had a more significant trend line in wedge. You take the divergence line, and there's your negative divergence, and it broke down here, and it's had, again, another kickback rally. I'll give it this. It's been resilient. The commodities are in a bull market, so shorting can be a little more difficult. But this looks toppy to me. Whatever, I still like it. And it's an update to an existing trade if you took it back here and you've hung in there with it, or a new trade setup right here. And this is what I wanted to show you. Nice, clean uptrend line right here. Negative divergence right there in place. And so at resistance too, give or take. Really not a hard level, more like a resistance zone right here. Break this trend line. It should take us down to that 571.5, and we already hit it a couple times. It's a decent support, but then ultimately I still favor a move down here at least 553. That would give you, if hit, let me move this line like this. So I don't change my trend line. Now I'll drag it down. That's about almost 6%, a little shy of 6%. So decent, especially if you're trading futures. If you're trading corn itself, you can double up, take a little bit bigger position size on the ETN, which is CORN, or futures. They're already leveraged, so you trade them. You know what they are and how they work. Alrighty, next up, sugar. SB. I like this one. It's not really doing much yet. I mentioned it. Was it just yesterday? Day before? Last couple days. Trade idea. So there's two time frames we're going to look at here. This 2-hour candlestick chart, 6 months of price action. Now, recently back here had highlighted as a long trade idea, and I showed you I have a line on the PPO. Let's just focus on the PPO for now. You have this line right here, these extreme lows on the PPO. And I mean, I can't recall many securities that trade so well to one single indicator, and it's not going to work forever. But when you look at these low-level bullish PPO cross, that's when the orange line, which is your PPO line, crosses the white line, which is a signal line. I put the white lines there. Low-level PPO crosses right there, right there, right there. Look what happens if you bought just simply on that alone, nothing else. Just bought sugar each time that happened. You did pretty darn well, especially again active trading, swing trading. Now, and I just started to add in the red lines. We're starting to cross right now. It's not definitive. You can probably make it out here in the video. If not, my apologies. I can't really expand this window. It doesn't drag and move like some of the other charting programs I use. But what I can tell you is the lines have crossed. And I mentioned it the other day, we also broke this near-term uptrend line right here. We ran into the 0.1984 resistance a couple times there. We just had the bullish PPO crossover finally. We're also coming off, there's another level I have here on the RSI. I know I'm talking fast. There's just so much in this chart. So where I showed you where to buy, so I put the red lines at the crossovers above the zero line. PPO zero line is right here. So I'm going to circle real quickly all the crossovers going back. Had one there. The red lines, you can see them. Had one there. Now all these we were in an uptrend. These weren't big drops, but they were drops nonetheless. They coincided with these bearish PPO crossovers that occurred above the zero line. Again, I don't have each and every one marked. You can just see them there. You can make them, replicate your own chart and then see that there. You had one there and then one there. So good stuff. Again, for active trading, in and out, you get 2, 3, 5, 6, 10%. Get out. And there's other things to look for. And again, the same things that are buy signals, you can use that to go long and then reverse once you finally get your sell signal. And then the other thing too is this RSI. I have an extreme overbought reading about 86.275 right here on this 2-hour chart. So look what happens when you get there. Well, last time we got there was here. Then you were there, right there. Got that drop. Right there, we had one. Right there, we had one. It wasn't big, but it was a little trade to be made. And right there. It's the best when you get multiple sell signals. I wouldn't trade off, or I'd advise against trading off any one single indicator. The better case you can make, the more indicators or trend line breaks and other things like that you can do to justify a trade, the better off you're going to be. And at the end of the day, you might have all your indicators firing and saying sell, 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 but the darn thing just goes up. So that's what stops are for. Target still maintains, I still maintain T1 down here at 0.1845. And then I'm talking a lot on this one because, I like it. See a lot in the charts. These are, I did it here with just the sell signals on the 30-minute chart, hourly. We drop down now to hourly candlesticks. And you can see bearish, all the bearish PPO crossovers are there. I'm just going to circle what happened. This one's still to be determined what's going to happen here. But you can see each and every time we had bearish PPO crossovers above the zero line. You wanted to be short or get out of your longs in sugar. Simple stuff, right? All right, so we'll see. It's either going to play out again this time or not. So I like that one for going into next week. Coffee, KC. This is a 6-month chart, 2-hour candles. Big divergent high right here in coffee right there. And I'm going to show you a long-term chart here in a second. But there's your negative divergence on the 2-hour period chart. I think we'll come down to at least this trend line and or that 2.1793-ish support level. Drop down to a 60-minate chart, and let's just see if there's anything different there. No, just the divergences that have continued to build. I pointed out coffee back here. It back tested, put in a marginal new high, and the divergence just kept building, getting bigger. And now we're finally starting to move down impulsively. We took out that 2.3985 support level. We have minor trendline support there that's just starting to crack. And these are your potential targets or support on the way down: 2.2815, 2.2349, and my minimum swing target right now, we'll call that 2.15 rounded up. Could certainly be more. Let me show you one other chart. That's this chart here. This is the futures chart, the continuous contract, a weekly, a very long-term chart. Goes back to 2001. You can see the big trends, and the big trends are identified here. These are measured out. This was a 295% rally off that divergent low right into that divergent high. Correction there after the negative divergence played out. Then you had a steep run here. And this is what coffee does. It's kind of like lumber, nat gas, and some of those commodities I like to trade, but when they're trending, boy, they trend. They're often what I call unidirectional securities. They're either going straight up or straight down. There's sometimes they'll consolidate or have little snapback rallies, but the trends can be super powerful in these type commodities. And again, it's just how well it trades to the technicals. You can see this chart, and you just look and see all the, bullish divergences. That's where you want to look out for a trend reversal. And it's not just, again, you can't just start buying divergence, but you buy trend line breaks, wedge breaks. And so in this one, we've actually gone parabolic. And I pointed that out in lumber about 6 months ago when lumber had made that big run that I showed you on the chart. These parabolic trends never end well. It's the nature of the beast. Everyone's buying, can't get enough coffee, and all of a sudden, it's like trading places. Remember that movie? They were on the floor trading orange juice futures, and they hit the sell. Then everyone starts selling, and that's what happens. So anyways, to just back up real quick, I mentioned coffee right here on the site as a long-term buy on a breakout of this downtrend line, and I gave you 3 targets, 60, 90, and 160% returns. We hit my 60% to the button, pulled back, went up, hit my 90, punched through it, and just recently overshot the 160, 100. Again, it was a 2.3-ish price level. And this is what I believe to be a momentum-fueled overshoot. We are above that previous divergent high, and we are overbought right now. You can see we're overbought. The last time we were this overbought in coffee, you got to go all the way back to right here, and that ended with a divergent high. Sometimes it's one and done when you're overbought. At the very least, we get probably a pullback off this overbought reading soon, possibly push up, make a marginal new high like we did back here, right? And then the top comes, but sometimes it's one and done. Sometimes you get overbought and that's it. Well, we had a little bit of divergence there. So either way, that 60-minute chart that I covered in the beginning and the 120-minute chart, those should be your guides for near-term stuff. And if you want to, if you're in it and you want to set a stop and let it run, probably pull back all the way here to that previous target I had there, about 170. That would be a long-term swing target. Again, hard to say whether we're going to get one more thrust up. It's certainly in a bull run right now. Maybe not. Either way, I think we come back down to 170 and then resume our uptrend. Coffee, like so many commodities, in a bull market. It's been moving up, consolidated for years around this $1 level, and then boom, broke out and ran. And here's lumber. Really, it's rolling over. That's the March contract. I think when I mentioned it a couple weeks back, we were at, let me go to, must have been on the 60-minute chart. I think it was this one here. Yeah, no, 120-minute chart. Yeah, I said you could take a shot at this resistance right here. It was at 876.71, but I said, as I alluded to earlier in the video, we had unconfirmed positive or bullish divergence. That means the indicators hadn't yet crossed over at that point, and look what happens. They keep going up. Then we still have potential divergence. It's pushing it. If we go up much more, we're going to take out those previous highs. But we've already exceeded the stop. We were there. The last update I did, I said might want to give it to the end of the day, and we've had, yesterday, and I think even the day before, we closed above that level, and now it's above that 1,000 level right there. Again, divergence still in place, but just updating this as really a stopped out trade. And then Treasury bonds, we had ZB flirting with these previous highs right here. You have pretty much resistance, and you can see that well in TLT as well. So it was recommended, suggested as a short there. We went up towards, push those previous highs, and then most recently we put in that divergent high, broke down. It's been a nice move and hit that. I may have added this line since the last update. I believe I did 160, 189. I noticed quite a few reactions along that level, and we hit it so far, but we bounced. Now we're back testing this downtrend line, so I still think we may get another jog down, and just not, my convictions aren't strong on it, but I still have that 159.207 target that I think will be hit. I still, and actually quite more. Here, let me show you the TLT. again, when you look at TLT, you're zooming out on a daily here to longer term time frame, and the case is made for an even bigger top. You had negative divergence on that marginal new high right here. I'm talking about that pop, and then failed breakout, and that took us back down within this trading range right here. At least it was a trading range there, and so I still think we can work our way down. See, there's price support that I did have that already on this chart, and that's what we hit in the last couple days. We've been consolidating, so I still think we'll come down to that uptrend line slash 146 support level, possibly more. Remember, this is a pretty big, it's the first big divergent high in a while. We could have more downside there. The other one that I mentioned for you was LQD, corporate bonds. That one was a short right here into the rally into the 134.10-ish resistance, and it played out. That was there was I think my first minimum target 132.31. Came close enough. I haven't fully hit it, and I think we'll jog down and hit it, and then maybe down to the bottom there, that 130.172 level. But again, there's positive divergence in that they just put in. No negative divergence. You have indicators making lower lows, but prices also made lower lows. So the only thing in this chart divergence-wise was this divergent low there. And, you know, if we do have a more downside or not, we could work our way up. This is a key uptrend line. That's what you want to watch. If and when we get there, we'll see if that looks like another objective shorting entry. Or a possible breakout above. I really doubt that, but it is possible. Anyways, that's where we're at. Let me make sure I covered everything. I got, yep, precious metals, all the commodities that I meant to cover. That is it. All right, guys, we're gonna wrap it up here. And again, if anything big happens, I'll be around today, but I'll probably be cutting out shortly before the close today, unless I see any reason to stay at my desk. So this has been Randy Finney with Right Side of the Chart. Have a great weekend.